Morning, how you doing? It is Monday, November 11th, and this is the Zero DTE morning analysis. This is where we take a look at the situation in the morning for our trading day. The market is still on an upward bound direction. It is going to the moon, apparently. We are above yesterday's Friday's close. The VIX is dropping dramatically. It might even imply an edge case scenario in order to recapture some of the premium that has accelerated its decay. And we'll talk about all of that right now. So first of all, let's take a look at, there's a few things. Let me just say that every morning we're trying to figure out just a few things in order to set up our trades. We're looking to see the market direction, the amount of volatility, big picture, or what we call the volatility regime, and then the implied volatility for the morning. We're also looking at where market structure is for a potential trade entry setup. So those are the things that we're looking for. Let's get to it. All right. First step is taking a look at market direction. It's very obvious. Since the election, the market has just been on a rampage, going straight up. And so it's a bullish trend. We will be looking at long out-of-the-money butterflies. So next up is the VIX. And we can see the VIX here is in right around 15, about where it was on Friday. That implies over here, you'll see our VIX guide for the classic out-of-the-money butterfly. We should have a range somewhere between 10 and 20. All right. Let's now go to the, We'll go to our Thinkorswim, and we can see what we do here is this is how we would determine morning volatility or morning implied volatility. And we have a scale that we're working with from this or derived from this. This is after years of analysis and empirical evidence, looking at a very large at-the-money butterfly pre-market, before any market reports, although this morning, Monday, there are no market reports. By the way, today is Veterans Day, so generally volatility and liquidity are low, and the bond market is closed, although the stock market is open, so we don't expect anything major happening today. However, we're still on this huge bullish run, and so consequently we're seeing on this fly what we call the big ass fly. And there are some cases where it also turns into a trade if the debit is below a certain amount, but it's not anywhere close to that amount. And that amount is 25. So we put on an at-the-money 50-wide E-mini S&P futures butterfly, and then we look at the debit. And right now that debit is around $30.75. That produces a less than optimal risk to reward. So for that reason, we don't put on this trade the way we would if that debit was below 25. And I can explain that later in another video. But let's take that now to our VIX chart. And so we apply this guide here. We call it the poor man's straddle, which is essentially the big ass fly. And we look at where the scale is. We can see that we're clearly in the 30 range. That means that we're somewhere between the zombie land range of 10 to 20 wide, somewhere between 10 and 15. So our out-of-the-money butterfly should be relatively narrow, between 10 and 15. You choose your poison, what works for you. And now we'll take a look at the market. You can see the market, pre-market, is well above Friday's close, implying that we're going to have a gap up this morning. And we are moving. Here are the only discernible entry points or entry setups. Possibly if we pull back to here, we'll take a bullish fly from there or any one of these pads. It looks like at about 60.27, 60.20, and 60.10 all seem to be viable levels that we can take a trade. On Friday, we got a nice entry here on 60.10, which turned out being an excellent trade. So the only other thing to report is that Tesla pre-market is up another 20 points. So that is just on an unbelievable tear. All right, so there's our full report. We're bullish. Volatility regime is in zombie land at its lowest level. Implied volatility for the day is at extremes. So we're looking at the narrowest end of our range for butterfly widths between 10 and 15. We have our, look, sometimes on days like this, we don't actually see a trade. If the market is trending up and never really pulls back. We saw that a couple of times last week. I think on Thursday we saw that. So there's another edge case that we could consider right now. So why don't we take a look at that edge case strategy. And if we take a look at our VIX and how I have it all annotated here, you'll see this notation here where it says 0 DTE, then 0 to 1, 0 to 2, 1 to 2. What we're saying is that when volatility gets this low, you can start considering pushing it out to maybe a 1 DTE or 1 day to expiration, or even as much as a 2 DTE if it gets very low. And the reason for that is that with this extreme low volatility, the premium in our options, the rate of decay has increased dramatically. So on that very last day of expiration, we don't have as much premium to collect, not giving us a higher gamma risk and lower potential profit or potential opportunity. So by going out 1 day, we can recapture some of that accelerated premium decay with a 1 DTE trade. So you might want to consider a 1 DTE trade for tomorrow and possibly out to Wednesday in order to recapture that. So we would put that on top of the 0 DTE. We put a 0 DTE and then a 1 DTE, and hopefully we can capture that extra premium. So that's an edge case scenario that we call time warp. If you're interested in learning about these strategies and taking our blueprint course, take a look at the link below. Other than that, thank you very much. Happy trading for today. Take care.